Welcome to today's Employment Standards mini overview on vacation pay and entitlements. Thank you for joining us. Before we begin, please be aware of our disclaimer and copyright notice. I'll give you a moment to read it. Basically, we've made every effort to give you the correct information, but if there are any discrepancies between this presentation and the Employment Standards Code, the code will prevail. Please note the copyright on this presentation belongs to the Government of Alberta. Vacation consists of two components, vacation pay and vacation time, and those components can happen at different times. The first component of vacations is vacation pay. Other than those exempt from vacation entitlements, vacation pay accumulation or payment can start from the first hour of work. In the first 4 years and 364 days of employment, vacation pay is calculated at 4% and 2 weeks of time off. After 5 consecutive years of employment, vacation pay is calculated at 6%, and the employee should get 3 weeks off. For employees who are paid monthly, each week of vacation pay is calculated by taking the monthly wage and dividing by 4.3333, which is the average number of weeks per month. An employee on a protective leave, as provided in the Employment Standards Code, continues to accrue length of service with their employer, therefore maintaining their vacation entitlement. The second component is time off for vacation. Employees should be provided this within 12 months of the time being earned. Vacation days can be provided in one unbroken period, or if an employer requests in writing, vacation can be taken in 2 or more periods as long as each vacation is at least a half day long. If vacation pay is paid on every pay, then the time off is given without pay as vacation pay was paid in advance. And if vacation pay is accrued, vacation pay should be paid by the next payday after their vacation starts. Sometimes an employer may wish to establish a common anniversary date for employees to take vacation. If a common anniversary date is established, the employee must not lose any of their entitlements as a result of the date imposed. Vacation pay is a percentage of wages earned, and so how do we define wages? Wages do not include things like overtime, general holiday pay, expenses or tips or gratuities. Wages do, however, include money paid for bank time off instead of overtime pay. When it comes to bonuses, vacation pay is only payable on bonuses that are paid and production-oriented or related to hours of work or efficiencies. They do not have a discretionary component. For example, a Christmas bonus is not part of wages, so vacation pay does not need to be calculated on those. However, if a bonus is related solely on a sales goal, that is included in wages for vacation pay calculations. Let's review calculations for vacation pay of 4% or 2 weeks off of work. Essentially, employees should receive 2 weeks off annually after their first year of employment and not lose regular earnings while on paid time off. Usually, employees will receive their regular salary or wages for the time they are away. In the first year, the employee is building up their vacation entitlement. Although they may receive their pay at any time during the first year, they aren't entitled to the time off until the beginning of the second year. The time spent working and building vacation pay in year 1 is to take time off with pay in year 2. Let's look at an employee who earns $40,000 annually. If employment ends at any time during the first year, the employer must calculate the wages earned in the first year and multiply it by 4%. The employee should receive that vacation pay with their final payment. Although the employee didn't work long enough to take the time off, they received the appropriate vacation pay amount. Let's say the employment ended right on the completion of the employee's first year. We would take $40,000 in wages earned for that year and multiply it by 4%. The total the employee should receive is $1,600 for vacation pay. If the employment didn't end, the employee would receive that $1,600 in vacation pay and would also have earned 2 weeks off. Some employers, instead of calculating the 4%, will pay the employee's regular salary for the 2 weeks off. Let's review calculations for vacation pay of 6% or 3 weeks off of work. A reminder that employees who have worked 5 consecutive years become entitled to 3 weeks off annually and should not lose regular earnings while on paid time off. Beginning on the day immediately after 5 years of employment, the employer must begin calculating 6% vacation pay on each check. The employee, however, is entitled to vacation pay of 6% of their wages from the previous year, from the 4th anniversary date to the 5th, to coincide with their 3 weeks upcoming vacation for the 5th year. So, what does that mean? Let's look again at an employee who earns $40,000 annually. In the 5th year, the employer must calculate the wages earned and multiply it by 6%. This is typically used for vacation in the 6th year. The employee is already entitled to 3 weeks off at the beginning of the 5th year. This entitlement is earned in the 4th to 5th year, but only calculated at 4%. Therefore, the employer must make a one-time adjustment and pay the employee 2% of the wages earned by the employee for the period between the 4th and 5th year. The 6% total means that the employee in the 5th year does not lose any entitlements for taking 3 weeks off. For year 5, the employee should receive $2,400 and 3 weeks off. For employees who are paid monthly, each week of vacation pay is calculated by taking the monthly salary and dividing it by 4.333, the average number of weeks in a month. Each week of vacation should be about equal to the regular weekly salary for the employee. The $40,000 annual salary is divided by 12 for the number of months. Then the monthly salary by 4.333, the average number of weeks in a month. This determines the average weekly wage. This employee earns $769.29 per week and should receive that amount for each week of vacation they're entitled to. All of the scenarios I just mentioned are for employers who do not pay vacation pay on every paycheck. Employers are permitted to do this. For employees who receive vacation pay on every check, they're still entitled to time off. It will just be unpaid at the time the vacation is taken. It is more convenient for some employers to establish the same anniversary date, called a common anniversary date, for some or all employees, for the purpose of calculating annual vacations and administering vacation periods. The most frequently used common anniversary date is January 1st. Some employers use different common anniversary dates for different groups of employees. The sole purpose of permitting the use of common anniversary dates is to simplify administration of vacation for employers. Consequently, when a common anniversary date is established and during its application to employees, care must be taken that neither the vacation entitlement nor vacation pay is reduced. Let's use some dates to understand this a bit better. An employer has established a common anniversary date of January 1st. An employee starts working on July 1st, 2021. The employee immediately begins accruing vacation pay on their wages as per regular vacation pay rules. Typically, the employee would need to wait until July 1st of the next year to be entitled to take vacation time off. However, the common anniversary date means that on January 1st, the employee who earned vacation time and pay for the previous 6 months could take that time off and get paid. As long as they are in compliance with the minimum standards, the employer may implement their own vacation time policies. Not losing any entitlements means that the employee should receive the appropriate vacation time and pay which were earned before the date of the first common anniversary. Once the first common anniversary date has passed, the employee becomes entitled to subsequent vacation on each January 1st moving forward. On July 1st, 2026, during the fifth year, the employee becomes entitled to earn an additional vacation week off as they have met 5 consecutive years of employment. Now, the employer must consider the employee earned 4% of wages from January 1st, 2026 to June 30th, 2026, and 6% of wages, or 1.5 weeks of time, from July 1st, 2026 to December 31st, 2026. The additional entitlement should be taken and paid sometime in 2027. On the sixth common anniversary date, the employee becomes entitled to 3 weeks vacation, plus any amount earned, but not yet paid in year 5 of employment. On the seventh common anniversary date, it's just 6% of wages, or 3 weeks of paid time off. Employees can request vacations at any time and can even be allowed to take half days for vacation. An employer should provide vacation time to the employee within 12 months of the employee earning it. This issue of vacation time can sometimes be contentious, as an employee is entitled to the days off but isn't fully entitled to when those days should be taken. Ultimately, the employer can decide when and for how long vacation can be taken. They can decline requests and subsequently assign vacation time by providing the employee with 2 weeks written notice of when they must take vacation. However, an employer cannot force an employee to take vacation time during the termination notice period of an employee. There are some exceptions to the vacation rules we've talked about. Construction workers aren't required to be given time off for vacation, but they must receive vacation pay that is at least 6% of their wages. There are some exceptions for vacation pay entitlements, like real estate brokers, those who work in securities, and insurance agents. These exemptions are listed in Section 4 of the Employment Standards Regulation. The options for paying out vacation pay are on this slide. Employers must provide their employees with a statement of earnings that lists vacation pay accrued or paid out at the end of each pay period. And remember, if an employer pays vacation pay on each paycheck, then they still need to give an employee time off for vacation without pay. Upon termination, all vacation pay accrued must be paid out. Vacation pay entitlements typically live through changes to the employment relationship. If an employee is terminated or quits and is subsequently rehired within 90 days of their last date of employment, the employee's original length of service is used to determine vacation pay entitlements. Temporary layoffs do not impact an employee's entitlements. This is because during temporary layoff, the employment relationship is maintained. The employee is still employed but not actively working. Essentially, for complete breaks of employment of less than 3 months, where the employee was no longer employed and then rehired, employment standards treats the employee's length of service as if they have never left employment. For employees who have been on extended job protective leaves, their employment is also deemed continuous for the purposes of determining if the employee is eligible for 2 or 3 weeks of vacation. For example, a person with 4.5 years of service goes on maternity leave for 8 months. While they were away on the leave, they met the 5 consecutive year threshold for 3 week eligibility. So when they return, they will be starting earning the increased vacation pay and time off. Finally, when a business changes ownership, it doesn't affect an employee's vacation entitlement. The previous owner must pay all vacation pay accumulated up to the date of transfer of ownership, and the new owner must grant any vacation time accumulated. If an employee is on vacation when a general holiday occurs, and the employee would have been entitled to the general holiday if they had not been on vacation, then they are still entitled to it. The employee can take a day off with pay on the first scheduled working day after their vacation, or in agreement with their employer. They can take another day that would otherwise have been a work day before their next annual vacation. Average daily wage is still calculated by reviewing the wages earned in the 4 weeks immediately preceding the general holiday or ending on the last day of the pay period that immediately preceded the general holiday. The above also applies to employees for general holidays that fall during job protective leaves or temporary layoffs. One consideration to keep in mind is that although an employee may be eligible for the average daily wage for a general holiday, there may in fact be no payment required for those who are on vacation or protective leave or layoff. This is because as the employer still needs to review the 4 weeks prior to the holiday, if no wages are earned during that period, there is no payment to calculate. And that brings us to the end of our mini overview on vacation pay and entitlements. If you would like to learn more about various employment standards topics, such as the ones listed on this screen, please scan the QR code to be taken to our website. Also, if you have a question, wish to make a complaint, or submit an anonymous tip to employment standards, please scan the QR code on the screen or call our contact center at 1-877 427 3731. Thank you for viewing today's session on vacation pay and entitlements, and we hope that you have a pleasant day.